everyone, and welcome to the Master Series, your guide to intelligent production, brought to you by Entertainment Partners. I'm your host, Natalie Nelson. In the entertainment industry, we're focusing on important issues that impact workers through in-depth discussions with legal, tax, payroll, technology, and production experts. And today, our expert panel will be discussing the Indie Producer's Playbook of best practices for setting up and running a successful production. Two quick housekeeping items as we get started today. First, we encourage you to join the conversation by posting questions for our panel in the Q&A section of the Zoom call. You can do so by clicking the Q&A icon in the navigation menu. We'll do our best to save time after the discussion today to answer your questions. Please also take a few seconds after today's webinar to answer a short feedback survey. This offers an opportunity for you to share feedback with us, as well as to suggest topics for future webinars. Your feedback is very important, and we thank you for it. Now I am pleased to introduce you to today's panelists. Today we are joined by entertainment attorney Stephen Beer, partner at the New York offices of Lewis Brisbois and national chair of the firm's entertainment, media, and sports practice. Stephen concentrates his practice on film, television, and music, representing industry-leading companies, and has acted as counsel to numerous award-winning writers, directors, producers, and multi-platinum musical artists. He is listed annually in Super Lawyer's New York Metro edition. Research and Markets has listed him as one of the top lawyers in entertainment law, settlements, and negotiations, and The Wrap has cited Stephen as one of 21 great thinkers of indie film. He is frequently a writer and lecturer about film finance, production, and distribution, as well as music issues and matters related to young artists, including his published book, Your Child's Career in Music and Entertainment, The Prudent Parent's Guide. In addition to his contributions in the legal arena, Stephen is a trustee at the City Parks Foundation and enjoys ice hockey in his spare time. Also joining us today is entertainment business consultant and attorney John Logigian, chief dealmaker and counsel for motion picture studios with high film output, independent film producers, and major film investors, entailing oversight of several hundred production, financing, and distribution agreements with an aggregate production cost exceeding $10 billion. His notable credits include 8 Academy Award Best Picture winners: The Lord of the Rings, The Lion, the Witch, and the Wardrobe, Shakespeare in Love, Good Will Hunting and The English Patient, Pulp Fiction, The Spanish Prisoner, and Cabrini, among others. His career has spanned roles in business affairs at Orion Pictures and International Creative Management. He has served as an executive vice president at both Miramax Films and Gene Dominion Productions. He has served as chief operating officer at Walden Media and an independent film counsel and business consultant. He is also a member of the Academy of Motion Picture and Sciences Executive Branch. And rounding out our panel is returning guest, entertainment attorney Maria C. Miles. Maria is founder of an entertainment law practice with offices in New York, which focuses on all areas of entertainment law, including narrative and documentary film, music, literary publishing, and digital media. She has represented award-winning producers, directors, writers, actors, television hosts, multi-platinum recording artists, and corporations in the fashion and sports industries related to their entertainment matters. She is president and executive director of the Hellenic Film Society USA and has also served on the board of New York Women in Film and Television. She is also an adjunct professor at the Fierstein Graduate School of Cinema and School of Visual Arts. And finally, moderating today's discussion is John Hadity, Executive Vice President of the Incentives Group here at Entertainment Partners, where he specializes in the monetization of tax credits and minimum guarantees. John began his career at Orion Classics, a division of Orion Pictures, where he served as technical and administrative director. He is former president and CEO of Hadity and Associates, a consultancy firm that specializes in risk management and production finance. He is former Executive Vice President of Motion Picture and Television Production Finance for Miramax Films, and recent projects financed include Snowden, American Made, and The Assistant. Hello, John and panelists. It is so nice to have you here today. I know that we have a packed house and lots to get to, so John, I will pass it over to you.
Thanks, Natalie. I appreciate it. And welcome, friends. Thanks for joining me today. You all share my love for risk management, so I'm thrilled that you were willing to participate today. So let's start, because a lot of what we're talking here is our business and legal affairs issues. And so, Maria, I'm going to start with you because the first question that I'm sure a lawyer gets approached for is, I got this script, I want to make a movie, what do I do? Do I, as I start fully developing this project, what kind of legal advice are you going to give me?
Great question. First, thank you for inviting me to participate on today's panel. It's always a lot of fun to do these with you. I think it can never be too early to reach out to an attorney, have the conversation with them. It's good to assess where you are. The worst thing I can tell you is it's far too early, but come back in 3 months or in 6 months. And I do give you benchmarks of what might be coming up and what will trigger that phone call. The other side of it is you come to a lawyer too late in the process, where you've done some things that need some heavy lifting and correction, where had you just made the phone call a little earlier, we could have just set the foundation properly. So I always say, we're building a house, we want to make it sturdy, let's build a proper foundation and get in touch with an attorney as soon as you can.
Thanks. So when's the appropriate time to establish a production entity? And Stephen, maybe I'll toss this one to you. What's kind of the optimal timing and whether or not one entity can serve multiple productions or not? How do you feel about all of that?
Sure. So the time to start production entity is like the time when you're beginning a new chapter or a new project. You're contemplating it, you're acquiring rights, you're engaging with others in a contractual relationship. Those are things that you don't want to do as an individual. You don't want to expose yourself to personal liability. We like to advise our clients to set up a new entity for every new project. If you're just thinking about it and you're doing some development just on your own, there's no need to rush into that. But the minute you're looking to acquire a property, or you're looking to register a copyright, perhaps it's an original screenplay, or you're engaging with third parties, it's a really good time to begin an entity and to have just a clean platform that is distanced from yourself individually.
So I agree with you completely about having separate entities. John, why use a separate entity for different productions?
Yeah. Again, thank you for having all of us, John, and it's nice to meet everybody digitally. The main reason is that you want to have a separate corporate entity. We can discuss whether it's an LLC or a C Corp, but a separate corporate entity whose only purpose is to make the film. This one protects you from liability, say if somebody gets hurt on the set, and if you have an overall general company, you don't want that company getting sued. It may not even have enough insurance coverage. So you have a separate entity whose sole purpose is to develop and produce and get distribution for your film. It also makes it easier if you have a talent element who's a guild member, whether it's a writer, director, or actor. That separate entity will enter into an agreement with the guild, the applicable guild. You may not have a guild member, and that makes it a clean break from another company that you may have that has other projects that it may be developing. So those are the reasons why, and there are others, but those are the main reasons why you want to have a separate entity that just produces the film.
Well, and I would also think, and Mary, you probably agree that if let's say you have profit participants on one project and that project did not perform well, right? And you have profit participants on your next film, and that film did really well, but they're different profit participants. If you're using the same entity, you're kind of exposing the people on the project that did really well right? To share a little bit of the back end, I would suspect, right?
Absolutely. The way I like to explain it is if we were to create one company, think of it as one giant box, and you put three different films in it. One is a huge blockbuster hit, the other one is a total flop, loss, and the other one is a litigation nightmare. If you've got them all in the box, all the profits coming in from the success is at risk for the litigation or potentially the one that's losing money. But if we set up separate boxes, a single purpose entity for each and every production, the money flow and outflow of cash and liability stays in that little box. It's isolated, so it doesn't get messy. You're not going to have lawsuits from other investors, from Project A suing because the litigation in Project C has caused some kind of financial outlay that isn't now going to A. So it really cleans things up. And I've seen very senior filmmakers make this mistake. So it's really important to understand that a single purpose entity should be formed each and every time. And we can talk about various structures and what's appropriate, how long to keep them, all the kinds of things. But as a rule of thumb, always create a single purpose entity for exactly the reasons both you and John mentioned.
So I do want it to, because now you've all kind of hit on structure, right? You used the word structure, and so let's talk about that, because I think the general understanding in the industry is that, oh, I'm gonna set up a corporate entity to make my project. It's going to be an LLC, right? But we've talked about, and John, you had mentioned LLC, C corp. Well, let's talk about that for a second. And Stephen, maybe I'll throw this to you, because I know that you said that you were working on a potential project in New York, and there's a particular structure that needs to be used in New York, right?
Right. So New York is a bit of an exception. Generally speaking, you really do want to begin with an LLC. It allows for beneficial taxation. It passes through to the member investors. A C corp, as you know, is taxed at two levels. So the elegance of the LLC works very nicely. In New York, however, where you have to apply for a New York tax credit, because it's a pass-through entity, and that happens with a limited partnership too, or an S corp as opposed to a C corp, it's recommended that the LLC engages, and you should set this up as a single-purpose entity, a special purpose vehicle, like Maria mentioned, and you're engaging that entity, and that's the entity that actually makes the film. You're engaging it to produce the film, and that's where, and that's the entity that applies for the tax credit. If you were to do it in New York through a pass-through entity, it would be very, very, the actual LLC the manager would not be able to control the money. It would go straight through to the member investors.
All right. So instead, so here's an example. Let's say you have 5 investors on a movie, and 4 of them live in New York and 1 of them lives in Utah, let's say. With a pass-through entity applying for a refundable tax credit, the state will wait for all the members to file New York State tax returns. And the extent to which they owe tax in New York, the state will actually carve out their pro rata share of the tax credit and apply it to their tax liability, right? So it doesn't reduce the cost of the film, hasn't helped anybody else, but at least they've saved a little bit on their tax liability. But let's talk about the person in Utah who may not want to file a tax return in New York, right? And if they don't file a tax return in New York, you're basically surrendering that pro rata share of the tax credit, right? Because it's just going to sit with the state until the tax return comes in from Utah. So yeah.
Another reason why one should set up a C corp for that purpose, or that specific tax purpose and for the application for a refundable tax credit like New York has.
What do you think, Maria? Maybe I'll throw this out to you. We're talking, we're talking about, kind of protecting members of an LLC from exposure on any level. What are your thoughts on using a sub LLC to actually produce the movie and deliver it back up to the parent LLC?
I don't dislike it, right? The more corporate shields you have in place, the better. But there are practical reality considerations with that. What's the budget of the film? Can the filmmaker sustain forming two LLCs? In New York, it is a little costly to form an LLC because of the publication requirement. In other states, not so much. So it is a conversation to be had each and every time. It does offer that extra level of protection, but they are intertwined because usually the financing LLC will be the manager and or member of the production LLC. So it's not that they're operating completely independently, but it does make it more difficult for someone to pierce the corporate veil twice.
Right. So we're talking a lot about New York, but the one thing I do know in the tax incentive space is that there are very few jurisdictions that require you to set up a company on the ground in the state in which you're working, but they all require that no matter where you set the entity up, it's registered to do business in the state. So you could use a Delaware LLC, for instance, and register it to do business in whatever other state you're working in, and you would not run afoul of the regulations on the tax credit.
Absolutely.
Yeah.
But it depends on a state-by-state issue. For example, Louisiana does require a new Louisiana LLC. So we can't just make the assumption. The other thing, it's just human error, or I like to say user error because I make tons of computer mistakes, is we forget as filmmakers in the rush and passion to get our project done that we have a Delaware LLC that needs to become authorized to do business in the state of New York or New Jersey or California. And if you are not authorized to do business in the state and have a presence, you've declared the citizens of the state that you are here doing business, it could subject you to individual liability and other potentialities that are really unfortunate. And it's just human error. Sometimes you forget. You say, I have an LLC. Why do I have to do that? And so it's an extra step. So if you don't want the extra step, it's okay. But if there are a number of considerations to be taken, it's too early. You don't know where you're going to shoot yet, but you need to start fundraising. It's fine. You just have one more thing to do.
Let's talk, because it's been mentioned several times, the word investor, right? So there are very kind of strict rules around raising equity, and I know that that you all have had experience with equity investors. I know when raising money from one or two people is like a family and friends raise, and it doesn't require the kind of strict preparedness, I should say, I guess, that is required with three or more investors, right? Because with three or more investors, you're selling securities. And so, I'll throw it out there. I mean, when you're selling securities, what are we talking about? Because that's a real legal issue as well.
So you have to comply with the securities laws, and there are exceptions and within the securities laws, but you need to really be careful right from the start. If you are selling securities, you really do need to engage a lawyer if you haven't already. If you're raising money from investors, and a lot of independent filmmakers will make this mistake, they'll take a form, a template that they saw from another project, and they'll change a few names, a few numbers on it, and they'll go out there, and that's really reckless and dangerous, and could subject you to securities violations and subject you to fraud. You, as a producer, raising money, selling securities, you have a fiduciary obligation, and it's a high standard of care. So for you to make this journey without an attorney is really something you should avoid. It's reckless.
Well, and let's talk for a second about, not John, I don't know if you've ever come across this, but I did once on a film where the producer raised money from, let's say, more than 3 investors, and one of the investors was not happy with the outcome on the project, financial outcome of the project. And because the money was not raised as Stephen described through proper securities protocols, the investor threatened to sue the production and get their money back, their investment back, because they wanted to file a claim that the process was not respected properly. And so you deal with equity investors all the time. What has been your experiences? I should say, what are some of the things that you've done that have been very protective of the investor?
Yeah, the securities laws are federal laws, as we know, and they apply to the raising of money for a film investment. So the main thrust of the securities law is that when you raise money, especially from people who are maybe not sophisticated investors, maybe they're not, super wealthy, that you have to disclose to that potential investor in a document the risks of such an investment. Very, very important, because after all, this could be a person who's a doctor and maybe knows nothing about film. And the risks can run in a document, they can run, 6-7 pages. You also have to disclose all the material facts pertaining to the investment. And this covers, a range of issues, how their money is going to be spent, the distribution agreement, which hopefully you will have, and how the revenue derived from the distribution of the picture will eventually find its way to the investor. So there are details, and let's call them material facts, which you must disclose, and that includes risk factors. And again, you must disclose them in a document. It's not in a conversation, over a cup of coffee. And this type of disclosure document is what protects, as John said, there's usually an initial investor, somebody oftentimes who has a passion to make a film, but may or may not be a producer. Or you could be the producer and you're raising money from equity investors. So the key is to disclose all material facts, not to omit any material facts. And as Stephen said, this is more complicated. We could talk about something like this for 2 hours, which we don't want to do. But because it's complicated, you really need to have an attorney in order to do what John is suggesting, which is to protect you as a filmmaker raising equity, or from lawsuits like John had mentioned that can arise when somebody is unhappy because maybe they lose all or part of their investment.
Thank you. Well, let me ask you this. There are people, I'm one of them. I have an S corp, which I use for certain things. Well, let's say I wrote a script and I assigned the rights. So I wrote it personally. Let's say I assigned the rights to my S corp. Why wouldn't I want to use my S corp as the production entity and just dump all the rights into my S corp? And if I did decide that I was going to set up a separate production entity for all the reasons that we just talked about, how do I handle the rights management on the rights to my screenplay, which are now sitting with my personal service company?
Well, I think what you're alluding to is you have a loan out company, what we call a loan out company or a furnishing company. And that is traditionally set up for an individual's services. So as a writer, director, actor, consultant, whatever it might be, and you should speak to your accountant on when the appropriate time is to form such an entity. But this is very much used for your day-to-day business, right? That's what you're using. And so if you think it's a smart idea to have a production use the same entity that you use for your individual services based on everything we've discussed, you may not be thinking it through fully, because now you're risking your annual income against potential liabilities on a film. And so we want to avoid that. The other consideration is investors may not want to use a pre-existing entity because it may have potential tax liability that we know about, that we don't know about. There could be something lurking in the background that is an unfortunate consequence that they now have to bear had you just simply formed a new LLC or the appropriate SPV for it.
But I mean, it's a fairly simple transaction, I would imagine, to dump the rights into the LLC, which you'd have to do, especially if you are raising money, right? Because my experience with investors, equity investors, is they want to be members and own shares of an entity that actually owns the rights, not only the right to make the film, but also, and when we're talking about film, but it's also film and television and new media, but they also are meant to enjoy the revenue stream, or that part of the revenue stream that they're entitled to, right? And so any investor I've ever come across wants to have an ownership stake in the entity that owns the rights to do what it plans to do, which is make the project, but also own a piece of the revenue stream, right? So the distribution rights will be licensed or sold to distributors around the world, and the revenue stream should come back to the LLC, right?
Correct. Yeah. For everything you just said, yes.
Right.
John, that's why you have to transfer those rights when you're ready to raise money and you really make a decision to greenlight a production, and you need to transfer those rights from your S corp to the LLC, and there you can put together your investment documents, and it'll be the LLC that will have the right to produce that film.
Right. And
I mean,
yeah, go ahead, John.
No, I was going to say we could probably make an analogy to a studio or a production company or a streamer. Warner Brothers is a huge corporate entity. They may have a subsidiary that is a corporate entity that wants to make many films. They want to develop films and they want to produce films. So the rights can go into that Warner Brothers entity. And there could be multiple sets of rights. There could be screenplays, properties, intellectual properties, books that they've optioned, and so on. But once they start to develop a particular project, develop meaning they're going to get a screenplay written, or maybe they've purchased a screenplay, the minute that screenplay and that development process begins, that studio or production company will create a new corporate entity. They may name it after the film, they want to make the XYZ film. And so they may say, let's take it out of the Warner Brothers development company, and we're going to put this project into the XYZ production company. And you, as people in this audience, if you're a filmmaking entity or you want to make more than one film, you can do that. If you can afford it, it would be good to have one overall entity that can acquire projects and develop projects. But once you develop a specific property, put it into a separate corporate entity whose sole purpose is to produce and get distribution for that film.
Right. And in that scenario, revenue streams are not crossed.
Correct. Yeah, very important.
Which goes back to what Mary was talking about earlier. Somebody posed a really interesting question, and I'm really glad they did. How important is it to have production reports on independent films? And I'm just going to start out by saying it doesn't matter if it's an independent film, if it's a studio film, if it's any kind of television show. Production reports are crucial from a legal and business affairs perspective because they play a crucial role in insurance claims, right? So if there's an accident on a set, if God forbid, somebody dies on a set, there is a record of what happened that day, who was there, where were they, what time did they show up, what time did they leave, what work was meant to be accomplished, and they become a crucial element in mitigating that claim. Can anybody think of any? I mean, that's the reason why aside from progress reports and being the money police for so many years, I wanted to see production reports to see, like, are they taking too long? Are they not, not getting the setups done? It raises real red flags for people that are controlling the purse strings. Anybody?
Right. It's all discoverable, right? If there's a litigation for any reason, it's all discoverable. And I think it protects the production, assuming production was being run properly. But at least it points to what may have happened. And listen, accidents do happen. We have PAs. I've never done a production where the PA hasn't hit something with the production van. Whether it be a hydrant, whether it be the catering truck, whether it be, because you've got the youngest person on set driving something they've never driven before. So it can be something as a minor fender bender to a major issue, as we've been seeing in today's world. And it's always great to understand. You may also need to maintain those records if you have a completion bond in place and you need to send weekly reports to a completion bond company. So I think proper housekeeping and maintaining records is excellent.
So John, there are instances where the producers are not actually physically making the production on set. And so they want to see, like a studio, they want to see the report on a daily basis. If there are yellow flags, red flags, they're not necessarily on the set or on location. So this is their way to take the pulse of the project. And if there are issues, they want to know about it sooner rather than later. Missing John. But
John's Wi-Fi may just have cut out.
Yeah.
So sorry about that, everyone. Looks like we've got John back.
Yeah, sorry about that. The company decided to reboot my computer in the middle of our session.
Don't worry, John. We'll fix it in post.
We will.
Yeah, exactly.
Keep moving.
Yeah, so John, we just grabbed a question from the audience. We were talking about risk management a little bit more. So if you have a few more discussion points you'd like to address, I know we have about 20 minutes left.
I do, yeah. So I really wanted to, we had such a nice, robust conversation earlier and yesterday about when to dissolve an entity that you use for production. And so I wanted to kind of get your feedback because there are lots of things to take into account, right? One is you've got investors. Let's say perhaps you've got investors that are invested in the revenue stream of the project. You've got let's just start there. Let's talk in general about when to dissolve an entity or not. Stephen, I'll start with you.
As a lawyer, I'm very liability conscious, and I don't like the dissolving entities, because when you do, you're exposed as a producer, and there are all kinds of contingencies you may not be anticipating. Oftentimes, producers will get E&O insurance, and they'll get it for a fairly short term. And if it's out in distribution and there aren't any issues, maybe they won't renew it. That's a mistake. They should. But if you dissolve and there is a problem, then you, as the producer, will be personally liable. That's really dangerous. So as long as there are obligations to the entity. Music licensing is another arena where you know, licensors can track the use of their copyright much better today than ever before. And if you dissolve your entity and a copyright holder, maybe you licensed your sound recording and your underlying composition for 5 years, and it's now 10 years out. Because of the tracking, the digital tracking that's available now, you're exposed, and the licensor, they're very sophisticated, and they will come after you.
Wait, Stephen, while we were talking about music licensing, and I don't know if you guys talked about this while I was offline, but with respect to negotiating music clearances, let's talk about that for a second, because I know that there are varying degrees of clearances that a production can get. And you have so much experience with marrying the music industry and the film industry. If you could talk about that for a minute.
Well, in my past life, I managed music artists, and I learned firsthand about the value of copyrights. When you're producing a film and you're licensing music, there are two copyrights to address. One is the sound recording, and that's they call that the master. You need a master use license for that. That goes to the copyright owner of the actual recording. It's typically a record label. And then the underlying composition, that's another copyright, and that's a synchronization license that you need to get from the publisher, and that gives you the right to sync the song onto the film. So those are two distinct copyrights, two distinct licenses, and the value of those licenses can depend on many things, but basically can depend on how you're using that music. Are you using it in a trailer? Are you using it in the most critical scene of the film? Maybe you're using it in the closing credits. Those are three areas where the value is heightened, and where a licensor, like a record label or a publisher, might want more money. So how it's used, where it's played, the popularity of the music, those are the things that, and how often it's been used. Those are some of the considerations. But I have seen instances where clients have shortcut it. And there is a way to do it right. If you're just focused on, and you only have a little bit of money, which is often the case as a producer, you're running out of, people are thinking about licensing music a little late in the process, and they run out of money. One of the things they can do is just get a festival license. And if the film does well at the festival and there's a distribution deal, if you have leverage, you might be able to negotiate a scenario where the distributor will help pay for the additional licenses outside of the trailer. So you'll be able to keep the music in the film, and you'll have the money to be able to license it for the film and perhaps the trailer. But if you only have a little money, you can work on a step deal, starting with a festival license, and then work on various milestones and payments commensurate with that.
So, and let's assume that the festival licenses cost less money than a full-on exhibition license, right?
Yes, so, absolutely.
I'm not even sure if I should even say this, but I'm gonna say it anyway. A documentary filmmaker once told me that this is for documentaries, using music in a documentary that was pulled from a trailer doesn't require a licensing fee. Is that true?
No, it's not. That music has two copyrights, and you need to license them from the copyright owners.
Okay.
And I'm sorry to add to this, but whoever came up with this 3, 4, 5 second rule, that you can use anything you want for 5 seconds or 4, it's not like dropping your cookie on the ground. No, like you have to clear
it. So, Stephen, you used a great word, milestone. And so, Mary, I'll throw it out to you because I'm wondering, there's all this stuff to think about, right? We're trying to protect producers and financiers from unnecessary risk. And there's a lot to remember. Is there a checklist somewhere to make sure that milestones and key events are not missed during the course of production? What would you recommend? What's the best course of action?
So I tend to tell filmmakers very early on, start at the end. You know that you want to deliver to a distributor, so get a delivery schedule. There are plenty of delivery schedules online, even if you don't have a distributor. And you may not need all the technical aspects of that delivery, depending on the way you shoot your film, depending on the outlet. Is it streaming? Is it theatrical? But producers are generally unprepared for the depth of all the legal requirements that are needed. So start at the end, figure out what you need. Of course, coordinate it with your production attorney early on in pre-production when you sit down. I generally sit down and create a schedule of when things need to be done. These things must be done during pre-production. This can wait till post. These things you'll be accumulating during production, so put them in a separate Excel worksheet. I know producers hate it when I tell them to create tables and Excel sheets, but it does make your life easier in post-production and delivering to your distributor. For example, you'll need very specific credit provisions. You need to tell your distributor what credit obligations you have, what paid advertising obligations you've made to everyone on your film. So better be prepared for it. It makes life easier to just be prepared ahead of time. But definitely speak to your attorney. This is where the good relationship between an attorney and client comes into play, where you have those, yes, we put out a lot of fires and we're there for the emergency, but it's also a lot of planning to avoid those fires.
Is there a way, because one of the things that I see a lot when I'm reviewing potential loan opportunities, I look at the budget for films, and what I see blatantly missing are delivery elements in a budget for a project. And so let's forget right now about the physical elements, like the film elements or digital elements. Let's talk a little bit about the paper delivery, right? And now a lot of that even now can be done digitally. I mean, certainly EP can help clients with digital everything. Is it, I guess what you're saying is it's much better to talk to your attorney, go over a delivery schedule and look and see what of these things is going to cost me money, right, at the end of the day, and how am I going to prepare myself physically to be able to deliver all of these things that need to be delivered to a potential distributor?
Correct. You'll need, for argument's sake, I have this conversation consistently where I'm looking at a budget, and it's not my place to look at a budget, but I'll ask the question, have you budgeted for E&O, as Stephen referenced? Have you budgeted for copyright and title reports? Have you budgeted for clearance reports? And we talk about when all these documents need to be done and reports need to be ordered so that we are ready not only for production, but most definitely for distribution.
Right.
And I would add to your question, John, about documents. It is crucial beyond belief that you as a filmmaker observe certain standards when you are making agreements with talent, with below the line people, with suppliers of equipment if you need to rent equipment. And what I mean by that is you have to make certain that there are certain provisions in every one of those agreements that are crucial to protect you from claims, even though you may have insurance for some claims, and to enable the distributor to feel comfortable with the adequacy and sufficiency of your documents, your agreements. that they feel like they are protected. Because remember, if somebody sues, they sue everybody. They sue you, the filmmaker, they sue the distributor. The insurance, again, may kick in, but distributors, especially for the bigger ones, studios, streamers, platforms, that one of the conditions they impose on accepting your film for distribution is that they review your documents, meaning your contracts with the actor, the director, the writer, and make sure you have all the rights that you must have in order for that distributor to be able to distribute the film in any media, in any language, subtitled or dubbed, throughout the world, for the number of years that they want the film rights for. And a very important thing, which is the first thing I learned as an attorney in the movie business, is that every single agreement that you enter into has to have what we call an anti-injunction clause. And that's very simple. It says, if the person, actor, equipment supplier, writer, director, has a claim, they can only sue you, the filmmaker, and the distributor for money damages. They cannot enjoin the distribution of the film. So again, we're not trying to create business for ourselves here. We're trying to protect you. It's very important that an attorney help you come up with agreements for the talent, for the below the line, for the DP, for the equipment supplier, for the locations that allow you to film and use the film, whatever their location may be. As an example, the actor film, the actor's performance. This is all important stuff that an attorney can help you with.
And John, just for the sake of clarity, explain what enjoinment is.
Yeah. So lawyers have options when they bring a claim in terms of what kind of relief are they seeking for their client. Typically, you slip and fall on a set, and you may sue the filmmaker because they were negligent in not removing the ice from the set. So typically you will sue for money damages. That person will hire an attorney and they want money damages. But sometimes you can sue for what we call in the legal profession equitable relief. And one of the elements of equitable relief is that you can ask the court to enjoin, in our business, what would they enjoin? Enjoin the distribution of the movie because the filmmaker violated a contract and the relief is not adequately compensated with money. You want to go further. And that's so that's called an injunction, and you're seeking to enjoin the distribution of the movie. And that is a no-brainer, has to be in every one of your agreements. We even put them in the agreements with prop houses. They're giving you a prop and you're filming it. You not only need the right to film it, but if for some reason the prop maker is suing for whatever claim, they cannot sue to enjoin the movie. They can sue for money damages, and that's it.
Thank you. That was a great explanation. Let me ask you, because I don't think we really talked about this, and it's one of those ethereal questions, really. But we have had a lot of questions about what is the appropriate time to hire cast and crew, above the line and below the line. What's the appropriate time? And my gut is always, well, they're with talent, they're going to want to have some kind of assurance that you've got funding, right? I mean, unless you're extremely lucky, I don't know. Has anyone here been extremely lucky in having their projects sign talent onto a film? And let's say talent in front of the camera or a director before money's been raised.
The only time that happens, and it does happen, is where the talent is also a producer or part of an executive, maybe an executive producer, part of a production company, something bigger. There are instances where you've raised, as a producer, just a little bit of money, but you've been transparent with the artist and the actors' representatives, and you've told them point blank that you have bridge financing that is contingent on the agreement of that principal actor. So this is not, we're not inventing the wheel here, reinventing the wheel. This goes on. It's a bit of a catch-22. You need the talent to raise the money. The representatives know that. Where the actor is emotionally involved in the project, loves the project, loves the role that they have in the project, then they can spearhead it and really step into a producerial role.
Right. Someone has asked a really interesting question. This person is currently financing an indie film in California, but that same person is also attached to direct. Can that person be represented by the same counsel for both? For financing and for directing?
Well, do they mean their production attorney is the same attorney who's drafting their director agreement and negotiating on their behalf?
Let's say that. Yeah.
I would say that's a conflict, right? You should, right. You have, listen, as the production attorney, it's very common to have the writer, the director, the producer director, or someone be the same person as your client or the representative for your client. And you basically say, look, I suggest you have another attorney review this for you, vet this for you. There is clearly a conflict because I represent the production company. And it's up to them whether they choose to do so or not. But I think you have the obligation to let them know that you are not their personal attorney.
Thanks. So there was another question from an attendee where this person is a co-executive producer, or perhaps may just end up being line producer on the film, and wanted to know if they should set up a separate entity for the services they perform on the film. They currently have an S corp that they perform services under, and I remembered this, and I'm curious to know what your guys' take on it. There are just there are lots of above the line people that get hired to their loan out companies, right? They're personal service companies. But there are only, I think, 8 or 9 positions below the line that where the IRS would consider them independent contractors and they could be hired through a personal service company. But if you're not in one of those positions, you need to be properly paid through a payroll company and taxes withheld, and, workers' comp has got to be in place, and, all of the withholding taxes have to be paid. I mean, that's my experience. Is anybody's experience any different than that?
My experience is that so many productions go into this blindly. Few producers understand the true distinction between independent contractor and employee. We have a very big labor and employment group here. We work very closely with members of that group, and more often than not, there are mistakes that can come back to haunt them.
Right. Right.
And the Labor Department is actually in the midst, I believe, of clarifying, or perhaps they just clarified even further the definition between an independent contractor and an employee, obviously leaning more towards making more people employees.
Right. Right. Well, look, that being said, we are out of time. So I wanted to thank all of you. And again, my sincerest apologies. Was not my fault. The company just decided they wanted to reboot me. But anyway, I hope I didn't miss anything except, well, I'll see the tape. So I'll be able to see what I missed. But I really appreciate all of you participating. Very valuable stuff and very interesting. So thank you so much.
Thanks for having us.
Thank you.
Thank you.
Thanks.
Thank you again, panelists, for sharing your insights, and thank you to our audience who's tuned in today. To keep the conversation going, we would like to invite you to head over to our new community site, theproductionlot.com, where you can find discussion forums where you can connect with your peers and other industry professionals, as well as John and our team of experts. Expand your network with connections from across the globe. Access exclusive content and the latest industry news. Ask questions, exchange ideas, share advice, find mentors, or your next career opportunity. It's free to join, and it's all there for you at theproductionlot.com. In addition to these resources, if you happen to be looking for guidance on production incentives or financing in North America, the UK, Australia, and beyond, John and our team of experts are here to ensure that your production gets the best guidance in the industry. At our production incentives section of the EP website, you can find legislation, a suite of incentive comparison tools, and information about tax credit placement and minimum guarantee financing as well. All there at ep.com/production incentives. A special thank you again to our panelists for joining us today, and to you, our audience, for tuning in. We look forward to seeing you again soon at the next Master Series.